Hello, everyone. Once again, thank you for being here with us. It's another Saturday, and we are here on Your Financial House. We wanted to thank you for making time to be with us today once again. And we will just do a summary of what we've done for the past 5 weeks with Trudy. So she'll go over all her topics with us and making sure that we understood her clearly and the different topics. She's just going to give us a refresher of all what she has done with us. So once again, Trudy, thank you for coming and thank you for being here with us. Welcome everyone who is on. Thank you for being here. Thank you for taking your time to be here with us on Your Financial House. So we've been getting a lot of responses about Your Financial House and what we do, and we are grateful for all those responses and all those persons who are taking part on a Saturday afternoon, making time to come and learn what their financial house is supposed to be. So I am grateful for you to be here. And once again, welcome.
Great. Thank you so much, Avril, for every week that warm welcome. I really appreciate that. And it's what I wanted to do today is to tie everything together. So, you know, that our listeners and viewers can see how everything works together. And one way we can do that is by, you know, discussing why we chose the name Your Financial House. All right. And it's very powerful. And when you think of a house, you think of certain levels in that house. And we're going to tie all of that together with what we've discussed in the past 5 weeks. And we even going to give a little snippet as to what we're going to be discussing next week and the next couple of weeks as well.
Okay? I'm excited.
Excellent. Excellent. All right. So I am just going to share my slide.
Yeah, go ahead.
You know, I love my slides, Avril.
Yes, definitely.
People follow by the slides, absolutely.
Yeah.
So as we discussed, the name of the topic for today is bringing everything together. Are you on the financial path to freedom? So what we want to look at is essentially looking at your financial house. All right. And with every house, you have a foundation, you have some structures, and then you have your roof.
Yes.
Okay. Right. So what is the foundation? What the foundation does is it's steady. With any house, you have to make sure that your foundation is stable. If your foundation isn't stable, everything else falls down, right? There is even quotes in the Bible about having a steady foundation as well. Okay, so with your financial house, what your foundation is protection management, making sure that what you build is protected. Okay, so it will look at your income protection, life insurance, emergency funds that you have put in place, budgeting, right? Putting a will or even a living will as well, putting all of those things in place. That is your foundation. And that's my snippet. That's what we're going to be looking at from next week. And it's going to be a lot of fun so that people can see how they can set up their foundation and then get everything else going as well. Okay. The next step in the structure is the debt management, right? And we've touched on this, quite a few times as well. Debt management, having a game plan to become debt-free as soon as possible, right? There are so many different strategies that you can use to help yourself get debt-free as soon as possible. And so you can see that light at the end of the tunnel, okay? The next level is your savings management, having things in place. And again, we spoke on this a great deal, and we're going to recap this in today's live as well. So looking at setting up, and this is for our Canadians out there, your RESPs for your kids, your RRSPs for your retirement plan, and your TFSAs. Okay, so all of that comes into place as your savings management. And finally, that's when your goals and dreams can come in and just make everything nice and neat. All right. So what we've discussed already is the structure. We've discussed a bit on the debt management. and we've also looked at the savings management. And again, I will put the shout out for anyone who has any questions of this, put it in the chat, reach out to me, direct message me so that we can talk more about these strategies as well as to debt management and to savings management as well. All right. So what was our first topic that we spoke about? The first one, and Avril, you weren't with me at that time. You came from with the second one. But this one was so important because it helps tie everything together.
Yeah.
You know what your FIN is.
Yes.
All right?
Yeah.
So we discussed what your FIN is, what it stands for. It's your financial independent number. It tells you when you'll be free from the need to work, when you don't have to work anymore and you have enough resources that you can survive fine without work, right? So it's where your investment income is more than your personal money needs. Okay, so it's about asking yourself again at this point, how long do you want to work for? Are you at the point where you're not even sure as to when you can stop working? Okay, or do you have some plan in place that you can see, finishing work at 60, 65, some people at 55? All right, and all of this incorporates working out what your FIN number is.
Okay, so I just wanted to make sure that we know what our FIN number is. I mean, yes, you said it to us in the beginning, and now you're reminding us what it is. Mm-hmm. And it's amazing that everyone should know what their FIN number is. It is very important, and getting to know that so late in life, for me, it is just not good. But now I know, and now I'm working towards it. So I'm making sure that everyone who's listening today know what their financial, what their FIN number is.
That's right.
It is very important.
It is very important. And I want to stress here, some of us start late. You're not the only one, Avril. Myself as well. It's not something that we focus on. So we may have started late. But guess what? It's never too late. It's best to get something started than having nothing at all.
Yeah, I think it's very important.
Yes, absolutely. All right. So the next session, what we discussed is your pay yourself first method. I love this method. Love this method. And I had so many people come back and ask me about this method as well, which, just helped me to realize the importance of us being able to share this information with people as well.
That's right.
When we learned it, we were like, whoa, wow. Right. And just being able to share this with people as well, we realized that they can use this to help themselves and help them working towards their FIN number as well. Exactly. Okay. So the pay yourself method is the golden rule for financial planners and financial coaches. Always look to pay yourself first. All right. So instead of having, the bills, the fun, and then the saving, you switch it to where you save first. That's where you pay yourself first. Then you see about your bills, and then you see about the fun. The fun.
Yeah. I just wanted to say that sometimes we have it backwards.
Yes.
As you say, we have it backwards. We go and have the fun. We take the time, we travel. We take the money and we travel. We do everything with it, and then afterwards we're looking. Okay, where is my food? Where is my this? Where is my that?
Yeah, I don't have money to pay my rent this month, and so forth. And you know what? We all want to experience fun, but it's about planning for it.
Yeah,
and that's the mindset that we encourage people to develop. Plan for it so that you do not pay for it in the end.
Yes, right.
Yeah, right. So setting aside for your financial goals prior to spending, that's huge. That's huge. Know what you expect to spend on, and then plan for it. And you put that in place, and you would see a great change in your financial outlook for sure. All right. So why use this method is because it creates a good financial habit. And that's what it's all about. And that's what life is about, making sure that you have good habits, right? And on the financial side, this helps you create a great habit, right? Your future depends on it, right? If you are not saving at all, what's going to happen? What are you going to live off of? How long do you have to work for? You know, are you going to, working beyond 70? Do you have to, find a job at some, Walmart or something to be able to pull in some money? And that is a real concern that we're seeing a lot of Canadians doing right now, where, at 60, 65, they're looking for work still. They're looking for work still.
Yeah, and that is a sad situation. It's not just Canada too, but
No,
even
it's
back
not.
in the Caribbean, you see people work from 12 o'clock in the morning until 3 o'clock to pack shelves in the stores
Yeah,
and to make sure that all the stores are clean and all of that stuff because they didn't have that before. They did
that's
not
right.
have, that finance put aside before to take care of themselves, passing the age of 65 after they
Yeah.
finish work.
Yeah, yeah, it is a very real situation. All right. So it's about making yourself a priority. You are the person who is bringing in the money. Why shouldn't you be the priority? Right? That to me is common sense. That's common sense. Okay. And I love this point. It's where you measure where your savings fall. Is it a mandatory savings?
Mm,
Is it something that you have to do? Or is it discretionary? Oh, I'll get to it. If I have some money left, I will put into savings, right? We have to move it from the discretionary bucket into
mm,
the mandatory bucket. And that's when things will again go so much better for us. Yeah.
it's just crazy.
Yeah.
We have life backwards because I think it's because it's more of what do you call it? It's more of you you were taught so to go to school,
Hmm.
get a good education, and then work for how many years and then retire. That's what
Yes.
we were taught. It's our culture. It was just put into us. That's what our mothers do, our
Yeah,
fathers do, our great fathers do, our great grandfathers, and that's what they did. You
that's
know,
right.
they
That's
didn't
right.
know any better. But now we see things are totally different because in the 21st century, we see that things is not going to continue like that because it has changed, like we
Hmm.
see from us. The generation has changed and a lot of things has changed in the 21st century. So it's no longer going to school
That's
and
right.
getting a great job and then working for 40 years and then you die. Because when you pass 65, 70, you're supposed to be relaxing and enjoying life. But
You're supposed to, as early as possible, to be
yeah,
honest.
as early as possible. But
Yeah, yeah,
sometimes it doesn't happen
absolutely.
that way.
Absolutely.
Excuse me.
Yeah. So the third session that we looked at is the reasons why, we struggle to save, the reasons why, we have an excuse as to not to save. And what I had done to get the points here to discuss is I had reached out on Facebook to a couple of friends and I asked a question. And it
Mm-hmm.
was such fantastic points that they brought up. And these are things that, I was aware of, but I didn't, it was good to see that other people are thinking the same way. This is why I struggle to save as
Mm-hmm.
well.
Mm-hmm.
Right. And I just want to go through, and we're just going through six. And this is by no means all the reasons as well.
Yeah,
All
yeah.
right. I know it's a little bit small. I apologize for that, but I just wanted to make sure I included all of them on the page.
It's
So one reason is that, they say it's too late for me to save. And
Mhm.
it's never too late. It is never too late. It's better to have something than nothing, right? And there are ways that you can make your savings work for you by investing it properly. And that's something
Mhm.
that we will discuss later. And that's what we're here to help people look at how to increase your savings, make it work for you, so that you can get it going and have it ready for you when you're ready to go. Okay. The second one is I will have time to save later. You know what, I'm having too much fun now. And this is for, the young people who, they just got their first job and they're so excited and they want to buy this and that and so forth. And this is a huge problem that we've seen where, coming out of school, they don't know what to do with their first paycheck, how to handle it and how money works, right?
Mhm. Mhm.
And so the background behind this one is there's a high cost if you wait too long to start, right?
Yeah.
If you wait sometimes 1 year, it could be $20,000 to $40,000 could be a
Yeah.
difference
Yeah.
sometimes, right? And so that's why it's so important to make sure that you save as soon as you get, because that means you can also get into that habit of saving as well and make sure it
Yeah.
gets going. Okay.
So the best thing is, sorry,
Yeah.
Trudy,
Mhm.
you want to interrupt there, but the best thing for us now is to teach the younger ones, that is coming
Yeah.
up behind us.
Yes,
Even
that's
our
right.
time with our children, let them know that it is important to save.
Yes.
Even though you giving them an allowance, but let them know that, from that allowance, I want you to not spend all that allowance that
That's
same day.
right. That's right. Get them into that habit as early as possible. Yeah. And it could be little things like when you take them out and they have their money, let them make the decision to buy something, but let them know, listen, if you spend it here, you're not gonna have it then. So that it gives them a little reality check as well,
That's
Yes.
right. That's right.
All
That's
right.
right.
The third one is I need the money for. And this one I found so interesting because there's so many reasons and excuses that come up for what you need the money for.
Yeah. Yeah.
I need the money because there's a sale on at Old Navy. Oh my
Oh,
goodness, I
yes.
love Old Navy, and Old Navy always has sales, right? And you always have those excuses
Yeah.
that come up. I need the
Yeah.
money because the kids have to do this or the kids have to
Mhm.
do that. There's a birthday on in the next 2 months. I need the money for that. I have to take my husband to, anniversary dinner. I
Yes.
need the money for that, right?
Yes.
So
Yes.
the solution, what I found for this one, is to take the time to create your budget. Set a budget. Know exactly what you're going to spend. If
Mm.
you know that you're going out every anniversary, if you know you have so many gifts to do for the year, right?
Mhm.
Getting back to school, back to school, you always have to spend money there, especially in
Yeah.
Canada. We don't have uniforms. We have to buy, we have to buy clothes. We also have the school supplies and all that. All of those things, they happen. You know it's going to happen. So
Yeah.
set your budget for those
Yes.
as well,
Yes.
right? Use the envelope method.
Yes.
Use
I
the
like that
envelope
envelope
method.
method.
The envelope
Yeah.
method is great. My mom used the envelope method.
Yes.
It's fantastic. It's
Yeah.
fantastic. Yeah. And I just don't know enough about money to manage it. All right. And this is an excuse that a lot of people do use. You know what? And so it's like, if I don't know about it, they just forget about it. They just put it behind them. Right. And my question to you is, who should know more about your money? Right?
Yeah.
We're here to share our knowledge, right? Make sure that you are taking that in, ask questions so that we can help
Yes.
get you in that place that you need to be so that you can
Mhm.
feel comfortable. You can sleep better at night.
Yeah.
Yeah.
Some people have anxiety because of
That's
financial
right.
debt.
That's
And
so
that one
true.
hit me so bad because, you would think that divorce is one of the most highest
Yeah.
when it comes to that, but financial debt is one of the highest when it comes to
That's right. Especially after COVID. Yes.
after COVID. Yes.
Yes,
Yeah.
yes, absolutely.
Yeah.
Right. And it does not make sense when you only have to save a little at a time. Okay. You're able to save probably $10 this month, probably five, probably 25, and you feel that it's not going to really make a move, make a difference. But I'm here to remind you that small savings add up. They add up. It's
Mhm.
it's it's once you're consistent. Let's put that in there. All
Mhm.
right. So if you decided, you know what, I am cutting back on my coffee intake, where should you put that money? Put that aside. All right. Because you were doing without it before.
Exactly.
Put it into the savings account, right? For some of us, I am no longer driving into the city. I'm no longer spending money on a bus pass to go into the city.
Mhm. Mhm.
What is that? What's happening with that money?
Mhm.
All right. And for those in my situation as well, are you putting that aside? Put it aside so that you can earn some interest on it. Save it. All right. So these are, little things that you want people to think about so that it stirs them to say, yeah, these are different things that I can save and I didn't even think about it. And this adds up. It adds up, but be consistent. definitely.
Yeah.
And the final one, and by no means the least, I have so much debt. Okay. And I'm here to applaud everyone who realizes that this is a problem. It is a
Mhm.
problem in Canada on the whole, right?
Mhm.
And there's nothing to be ashamed of. Nothing to be ashamed of. Rather, I would applaud you for realizing, yes, you have so much debt and you want to do something about it.
Yeah.
Right? Doing something about it to help tackle that debt as soon as possible is huge. And you find that if you put a plan in place and you have a timeline as to when you are going to pay off your debt, oh my goodness, it eases your mind. It eases your mind as you doing the process and getting there. And I remember there was a client that I had helped with this, and for her it was huge. When I showed her the plan, she was like, really? In 2 years? It was a big deal. It was a big deal.
Yeah.
So this is how we help people to realize that there is light at the end of the tunnel. Absolutely. Yeah.
Yeah.
All right. So the next topic we looked at is the four types of savings, because we talked about savings, how important it is. But
Mhm.
then when you have these savings, it is then important to split these savings up, right, into the correct buckets. So we
Yeah.
looked at the emergency fund, and the emergency fund comes up when you have, perhaps a job loss, medical emergency, probably you're changing jobs, you've decided that you want to take your career in a different direction, emergency travel. Your parents are not doing well and you have to go home immediately to see about them, and unexpected occurrences at home. The fridge breaks down.
Mhm.
Yeah. So you need to have that money set aside for these things that occur that you have no control over. And we looked at how much you should be saving. It should be 6 to 12 months to cover your monthly expenses. All right. So you make sure that you have that in place so that if anything, you can live off of this. And by no means you're going to be able to save this immediately. This is something
Mhm.
you work up to. And I want to stress that. I don't think I stressed that last time I spoke about it. But this is something that you work up to. It could take you 5 years to get there, but keep it going. Keep it going. Okay. And
Yeah.
then we look at the type of accounts that you can put your emergency account into, because you want to make sure that you have access to it when
Mhm.
you need it. But yet, because you don't know when you need it, you want to make sure that it's working for you at that time as well. So you're looking at a high interest account, those online bank accounts, the TFSAs, money markets. Those are the type of accounts that you're looking to put that money in, and
Yeah.
that's the emergency fund.
Yeah.
Yeah.
Funny enough that you said 6 to 12 months. I
Yes.
know back in the day when I was doing accounting, it was, well, back in the day, it was like 3 months that you would
Yes.
need.
Yes.
So things has changed drastically, I must
That's
say.
right. That's right.
Yeah.
It certainly has. With post COVID, as we refer,
Yeah.
that's how we refer it now. Pre-COVID and post-COVID. Post-COVID, it has changed.
Hmm.
You have to adjust so that you can accommodate, because you don't know
Yes.
if you can quickly get another job. You don't know the
Yeah.
circumstances. So it's always good to have that extra buffer, for
Buffer.
sure.
Yeah.
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 The second type of account we looked at is the short-term savings account, the I Can Touch Fund. All right. So
Hmm.
this is where we talked about in the previous slide about the I need the money for, and you have the gifts that you have to do, the anniversary dinner that you have to go to, and so forth, and the school supply run that you have to do. So these things are coming up. That you probably need $300 per child that you need to spend. Add all of those things up. Add all of those things up. All right. So say, for example, you're going to spend gifts probably 200 this year, anniversary probably $100 for dinner, and then for school supplies you're looking at 200. So that's 500 that you're looking at, probably for the year, and then probably $100 for some other miscellaneous. So that's 600 you're looking at.
Yeah.
If you divide that by 12, you're looking at saving $50 a month.
Hmm.
So you would have the funds ready for when you need it.
Yeah.
Okay. And in these accounts, this is where you can use the envelope method. You save it and you have each envelope for what you need it for. So you can set that up and have access to it for when you need it, when the event comes up as well.
Yeah, I think that is an amazing thing, because if you know that you're going to have this coming up and you
Yes.
have the envelope for it,
Yes.
I think that is really, really good, because sometimes you don't even have the envelope coming the envelope for it, but you know it's coming up. So you know, okay, this is where I'm gonna take it from. Like you gave an example with the school.
Yes.
For the school here in Canada, I know for sure you have the after school program, right?
That's right.
It's not just, the school supplies, the school shoes and the clothing and all of that stuff. You have the after school.
That's right.
So
right.
we don't have persons looking after our children, so we have to let them stay another 2-3 hours in the school until we're ready to pick them up. So
Yes.
that is an eye-opening to have those envelopes named and
set up. Exactly. It
set up.
would save you having to use your credit card, create more debt, and that's a huge deal for sure.
Yeah.
We then looked at the specific goal savings. So if you have a specific event that's coming up where you want to take your family to Disneyland or Disney World at some point in time, so you have to save. You have a couple of years that you want to do that for. So you have your timeline. You checked your flight prices, the park, how much it's going to cost. You have all of that together. You divide that by the amount of months before the event happens, and you know how much you have to save each month.
Yeah.
Right. So again, that's I know what I want. I just need to pay for it.
I like that.
Yeah.
Yeah.
So again, set that up separately. And it's an account that you cannot touch for anything else. It's a specific. You have that set aside. And again, because you usually have some time before you need to use that fund, again, the high interest accounts would work really good. Definitely a TFSA and a money market kind of account will work really good as well.
That's right.
And the final one in the type of savings, the fourth one, is the long-term savings, right? And again, this is why I wanted to do this session, because you show how everything ties in again. Your FIN comes in here as well, because with your FIN, you know what you need for retirement, right? You have that in mind. So you know how much you have to save and how much you have to put aside so that you are there. Right. It also allows you to make sure that you're using all the resources available to you. Right. We talked about your RRSP. Right. So, it comes out of your pay even before you're paid. That comes out and it goes into your group RRSP with your company. Right. And remember, your company, they usually match what you put in. All right. So max that. That's free money, guys. Free money. Max that out. So if they're saying they're going to give you 5%, up to 5% of what you put in, make sure that you are putting that 5%. Okay, because you are getting, you're doubling basically what you're putting in each month because the company is matching you.
That's right.
And then you have to make sure that you put it into the right investments. Okay, and there are mutual funds that you are out there, and mutual funds have different types of risk levels, right? And it depends on the type of investor you are, so you can know what type of mutual fund suits you as well. Okay, and that's the next slide that we're going to look at as well. But investing in a mutual fund helps spread your risk because of what the mutual funds invest in. It's spread across different types of securities, so you're not at risk if you invest in one. Okay, so we have to make sure that you know what you're comfortable with. And as a financial coach, this is something that I would sit down with you and discuss with you before we even decide what type of mutual fund. I can't just tell you, okay, this is what you need to invest in. It can't work that way. It can't work that way.
Yeah.
Right? I want you to be comfortable with what you're investing in. Absolutely.
Yeah.
Okay. All right.
And I guess it all ties into what type of investor you are as well when it comes to mutual funds, right? Are you a risk averse? Are you, what are you going to do? So
Exactly.
it has to deal with what type of investor you are.
What type of investor you are, absolutely. So when we discussed the point as to what type of investor you are, we looked at also the difference between saving and investing. And that's a pretty significant difference there. So while they both start with saving, you're putting aside money to reach your goals, and the objection is usually short term, and it's less risky. So you put in, little protection, and it's not protected from inflation. It's not protected
Yeah,
from
yeah.
inflation. However, with investing, you are still putting aside money, but it's usually for something specific,
Mm-hmm.
and it's usually for something medium to long term as well. So it's something that you can grow, somewhere you can grow your money as well, and you can create wealth from investing. All right, and it could be riskier. It absolutely is. Yeah, it absolutely is riskier, to be honest.
Yeah.
But it also is more protection from inflation as well. So
Mm-hmm.
that was the difference between savings and investing. And why should you consider investing? Okay, because you put your money to work, all right, as opposed to keeping your money somewhere where you're getting what, 5%, and that's just for holding it there. That can't do very much for you at all, right? You're able to build wealth. You're getting interest paid into your account. You're getting capital growth where you're seeing your value going up as well. You could also invest in property as well.
Mm-hmm.
That's definitely a type of investment for people who are homeowners out there. When you check the value of your home from 10 years ago, that's your investment has grown.
Yeah.
Investment has grown. That's pretty significant there. All right.
Yeah.
With investing, you have the opportunity to earn higher returns, and this is another major point as well, right? Compared to what you're getting at the bank, the interest rate is as well there. And I even checked with my dad just to see, like, it back home in Trinidad, what are the rates down there? And he's like,
What did he
yeah,
say?
it's nothing to write home about. Nothing. It's the same situation everywhere. It's the
Yes.
same
Yes.
situation everywhere.
Inflation everywhere. Yes. Yes.
Absolutely.
Yeah.
So with investing, you have that opportunity where you can get higher interest rates. We're looking at 4, 5, sometimes 9. I've seen 12% and more. All
Mm-hmm.
right. It all depends, and of course, this cannot be guaranteed, but it's definitely better than leaving it in the bank. And this is something that when we sit down with clients, we walk them through that process, understanding the market a bit better, how the market has done for the past 20 years, and they can see that
Yeah.
it's definitely worth it as well. All right, and you're able to reach your financial goals faster. All right,
Mm-hmm.
imagine if you had 20,000 in a savings account at the bank, you know and at the end of 60, 65 years, or I should say 40 years after you started to invest, from when you start to work, what kind of interest would you have then? Really, can you live off of that? A question to think about as well. Yeah.
Yeah.
So what do you need to know before you start to invest? And this is where you need to determine what type of investor you are as well. But before that, you also need to figure out what your purpose of investing for. If it's for medium term, if it's a long term, if it's for a specific goal, is it for retirement, is it to buy a house? All these things, you need to figure out what you're investing for so that you can determine the right fit for you as well. Right? Educate yourself. You should know more about your money than anybody else. I love that saying. You should know
Mm-hmm.
more about it than anyone else, right? And this is it here. What is your investor personality? Are you a cautious investor? Are you going to be looking at an investment every day just to see how it's performing? All right. If you're that kind of investor, then we have investments for you. If you're more open-minded and you're willing to try things, we have something suitable for that as well. If you're adventurous, I don't know what's out there, but I'm willing to try. Yes,
Exactly.
we have something there for you. And then we have those, the investors who they know what they're doing. They're ambitious. They want the maximum possible. We have something there for you as well. All
Mm-hmm.
right. And the beauty of it as well is that when you decide what your fit is, you're not, stuck to that. we can look at it again, every 6 months, every year, just to see, all right, let's see how has your, because
Perform.
you have more knowledge about investing, do you want to change? All right.
Mhm.
Or maybe your goal has changed. Or most importantly, maybe you are 5 years out from retirement. That's a reason to definitely look at your investment at that point in time,
Exactly.
because then you want to be less risky with that money at that
Mhm.
point as well. All right. So make sure you have the right mix of investments so that you can reduce your risk. And that was huge. So how I want to finish off, Avril, is I wanted to take the time to help, everyone who's looking at this video today to remember, if you fight for your limitations, you're going to keep them. You find that if you argue that, oh, I don't know enough about money, oh, I have too much debt, I
Mhm.
just can't save, you're going to keep them. You're going to find that you're not going to do anything about it. You're
Mhm.
not going to do anything about it. So, what should you do? Let us make our future now, and let us make our dreams reality. We know what we want. We know we don't want to be working for too much, longer than 60 or 65. What are you doing now to put that in place? Make sure that you have what you need to put yourself on that financial path to freedom.
Mhm. Mhm.
And that's huge. And yes, it can seem overwhelming, but when you break it down in chunks,
Mhm.
you'll be able to do it. Absolutely. And with our help here, we got you. We got you. We got your back. Absolutely.
Well, Trudy, I want to say a special thank you because you go to the bank and you don't get all that information. That is the
Oh
sad thing
no.
I'm finding out because, I mean, a simple budget, you know,
Yes.
is just it's just overwhelming that all that information is out there and you don't get it at those financial institutions that you think that you should be getting those things
That's
from.
right. That's right.
It's like you go to the bank and you don't get that information. So I am happy. I should change that. I am so overwhelmed that you are able to come and
Yeah.
share that information with us on your financial house because you don't get that information anywhere. You go to the bank, you don't get it, and you have made us realize so many things when it comes to your FIN number, you
Yeah.
know, paying yourself first method, the reasons why we struggle to save, the types of savings there are, why we invest, why we're supposed to invest, and the two sides of our mindset, So I am grateful that you are able to come on a Saturday to share with us that information because it is vital.
Yes, it is.
It's
It
like
is.
it's like a cup of coffee in the morning because we're
Mhm.
supposed to get it and we're supposed to realize that there is so much information out there that we are not told so by the
Yes.
bank, our own institution that we trust for years.
Yeah. Yeah. It's a sad state of affairs. What with the financial institutions out there, and hence that's why it was so important for me to do these sessions to let people realize, yeah, you're not the only one in this situation. There's
Yes.
so many of us in this situation, but you can find a way out and you can find a way to get more information. And that's what we're here for. That's what we're
Yeah.
here for. Yeah.
I think it was amazing to go through all of this with us.
Yes.
And ladies and gentlemen, if you have any questions, comments, please put it in the chat. Let us know how we did today. And I know for sure Trudy has done an amazing job,
Thank you, Aro.
coming here every Saturday for the past 5 weeks and telling us about how our financial house supposed to look. And next week, we're going to be going to some really good stuff. So
Definitely.
I'm looking forward to that as well, Trudy,
Yes.
because it is a great help. This is great information and very informative. I think everyone should know how their financial house should look like.
Yes.
And the basic things that we're supposed to know about our own money. The bank shouldn't know more about our money than
Not
us.
at all.
We're supposed to know about our monies. We are the ones working hard for it.
Yes.
So I think it's vital information that you've shared there with us tonight, this afternoon, sorry.
Good.
I'm saying tonight.
Yes.
No excitement. But ladies and gentlemen, if you want to get in touch with Trudy, her information is in the chat is on right now. So you
Yes.
can see, you can send her a private message on Facebook. Her email is on there at the bottom. Is Trudy Cheroff at gmail.com. I didn't butcher your name. I'm hoping that I don't.
Oh, you did. You did fine. trsherhoff@gmail.com.
Right, right.
Yes.
And if you think that you, somebody in your family who needs that information, share that video with them.
That's a
and
great
let
point.
them get in touch with Trudy or myself, and I will get them in touch with Trudy so that they could get the information that they need to set the financial house proper.
Yes.
Okay. So once again, ladies and gentlemen, thank you so much for your time, and thanks for being here. Thanks for your support and your love that you have shown us over the past 5 weeks. And please get in touch with us. Let us know how we can help you, especially Trudy. Trudy is able to help you with your financial house, putting it together, starting with a little budget. You never know what she can help you with. So,
Yes,
ladies and gentlemen, thank you. Any last words, Trudy?
I just wanted to say how much I've enjoyed, the sessions so far, and the engagement has been great. It has been awesome, and I am hoping to just do a little bit more so that people actually have this information at their fingertips, and that's something to come as well. So we'll put something together.
Well, we're looking forward to anything that you'll do for us to help with our financial house. So it is important to have our financial house in order. Our physical house, it is important to have it as well, but our financial house will help us sleep better, less anxiety, less divorce rates, less of so many things, So thank you so much once again. Ladies and gentlemen, Trudy Cheroff, we want to give you a special thank you.
Thank you.
That you have taken time to be with us on a Saturday.
Absolutely.
So next week, I know for sure next week that you will be here with us. You'll be continuing your
we'll
session.
send out the Facebook post so people know exactly what's coming and what to look forward to. So yeah, for sure.
All right. Well, you have a good afternoon, Trudy, and thank you again for being with us on your financial house.
Yes.
All right. Thank you so much.
Thank
Bye.
you. Bye.